got it. Okay, well, I'll take over from here. And like I said, I think Coach is going to, you know, I'm not sure when he's going to be back. We were hoping he was going to be back today, but, you know, we also are not going to push him either. We don't want him to push the envelope. No. We want him to really get better. So thanks, Paulie, for being here. I'm going to go through, you know, my views on some of these majors before I turn over to Steve and Stelios, so they can show us some of the cross rates and some of the indices. So thanks for tuning in, or thanks for broadcasting today. All right, sounds great, Paul. We'll see you in the chat room. And good morning, traders. This is Blake Morrow, and you're listening to the FACE webinar. And once again, Dale Pinkert is, you know, he's fighting pneumonia, and we did speak to him over the weekend. He is recovering, but we are, you know, wanting him to really fully recover. So, you know, he'll come back when he feels fit and ready. So with that being said, I want to welcome you guys and gals. And this is, you know, this is the euro dollar, and this is kind of the tricky, you know, situation we're in. And, you know, I'm not, okay, let me just delete a few things just so you can, I can kind of clean up this chart for you. And let me get rid of, actually, I'll keep that. Let me get rid of this fib here. And really these red lines, you can see these red trend lines right through here, this one right here, and this one, this lower trend line right here. This is what really is defining the euro. And if you're getting whipped around, it's probably because we're, you know, in this little consolidation pattern at this moment. And, you know, the euro looks like we could make it all the way up to 116.82, which would be the 618 retracement. That's possible. I can't get really bearish the euro until we're, you know, we're below this 116.30, 116.40 level. But you know, we're just bouncing around here. We're defined by this lower trend line. This lower trend line's really got the bulls, you know, excited, or at least, you know, covering up. Some of the bears are covering up some of their shorts, but it's hard to get really bullish the euro until we're back above 117. You know, we get a clean break above 117, might be a different story. One of the things that's keeping the euro confined at the moment is that the euro pound is under pressure. You know, we've got this news about, you know, the UK and the EU agreeing to you know, certain parts of Brexit. It's keeping the pound relatively bullish. You can see we're right up against, you know, new trend highs. I mean, we're getting close, above 130.150 right here. This would likely start squeezing some shorts. Okay, it's hard for me to be bearish the cable while we're above, you know, this breakout point here, this trend line here. And, you know, I got asked this morning while we were in the chat room, like, hey Blake, are you bullish the pound? And I'm like, I'm not. I am bullish. I'm not bearish. And while we're above this basic shaded area, you know, that's, you know, roughly here, while we're above this shaded area, there's no reason to be on the short side of the cable just yet. Now, I think if we get below this trend line here, you know, so we drop back below, let's say 131, 130.90, somewhere in that neighborhood, that could put a bearish spin back on the cable, at least near term, because then we wouldn't make new trend highs, you know, and then we start in a series of lower highs and quite possibly lower lows, and then I could start really focusing on, okay, maybe the pound's going to show us some failure up here. But until that happens, you know, I don't see it. But that doesn't make me long the cable either. I'm not long, because when I got asked this morning, you know, if I'm bullish the cable, I'm like, yes, I am. I'm just not long. So, you know, there's a difference between being bullish and then actually having a position on the market. And right now, I don't have a position in the cable at the moment. The Aussie is, you know, we had this failed, and I'm going to go back over to the daily charts really quick, and let me delete this blue arrow. That was actually from Friday. So we had the Aussie like a failure up here, and we couldn't break back below this, or break it back above 72 cents in the Aussie, and that keeps right now the bear's in full control. Now we do have this down channel, which means that even if you shorted the Aussie, like let's just say you shorted it right now, and I'm not saying that that's the right trade. I was looking at it, but that's, you know, not something that I'm in. But let's say you shorted the Aussie, you got to think, you know, what is the downside you're expecting here? It's, you know, looking at this chart, I'm not looking at the Aussie thinking, okay, you know, I'm expecting a move to 66 cents at this point. We're at 72 cents and channel support is right down here around 71 cents. So, you know, you could say, well, I'm going to short the Aussie currently where it's at 71.75, risk above 72 cents and target 71 cents. That's a potential trade. I don't think there's, I think the risk is manageable if you wanted to short the Aussie. I just don't think that you should be looking for a big gain at this point, knowing that there's this major Fibonacci support, 261% extensions that reside at the 71 cent level, at least right now. There's this constant battle, trade dispute, war with China, and that's obviously keeping the Aussie under some pressure. And until we see some, you know, negotiations with China and the U.S., you know, the Aussie is going to have a really hard time recovering. One of the headlines that came out over the weekend, or I think it was in the New York Times, is that China is actually pretty reluctant right now to they're pretty reluctant right now to negotiate with the U.S. because they just don't know if you know, any negotiation that they make is just going to get thwarted by, you know, the president. So it's like, well, you know, why even start these negotiations if you know that you're not going to go anywhere? Which makes sense. You know, I think that's part of their tactic too. You know, they're just like, well, forget it. You know, why do it? But anyway, that's keeping the Aussie under pressure, and also the Kiwi too. You know, the Kiwi is really confined to this you know, pretty severe downtrend. The one thing about the Kiwi is we did show false breakout, or false breakdown last week, which you have to be a little cognizant of. I am long some dollar Canadian. I picked it up here at 130.24 again. Or 23, excuse me. I picked it up again this morning. We're testing a 50% retracement. We're also testing this breakout point, and you know, I don't think NAFTA is getting done anytime soon. So that's pretty much the reason why I'm targeting this one to the long side. I don't necessarily like the price action at the moment. It was looking fine. I mean, we were just trading at 30, and then when the pound hit new highs, it just pulled right back. But at the same time, the dollar Canadian's being pulled down as the dollar is being, you know, dragged lower. You know, you have the Aussie hitting new highs, the Kiwi hitting new highs, the pound hitting new highs, the euro hitting new highs. So that just you know, pulled the dollar Canadian right back down. But I think that these levels should offer some pretty decent support. I mean, we did hit that's not the 618. The 618 is actually at 130.10 right here. So we're sitting, you know, just kind of in between fibs, in between the 50% and the 618. But I think it's actually holding up relatively well, especially considering how weak the dollar has been against the euro, against the cable. I mean, look at the euro's up 50 pips on the day. The pound's up 63 pips on the day. The Canadian's down 22. So it's actually holding up relatively well, considering all the dollar weakness that we've seen against some of the other majors. Not including the dollar yen, obviously. So this is just a little hesitation, I think, in the market, knowing that, you know, NAFTA is not close to getting done, at least not right now. One chart that I really wanted to bring your attention, I actually just sent this out to ForexAnalytix subscribers just moments ago. This is the Swissy. Now, I haven't been trading the Swissy. I have not. I've not super inclined to trade it. However, I've been saying for the last, you know, week that we have some unfinished business down here at this 161% extension. There were, you know, when we were bouncing here, and let me just kind of move the chart so you can kind of see what I was talking about. When we were bouncing here last week, back up to the 98 cent level, I have been pretty adamant about thinking that we're going to hit new trend lows and we're going to hit this 161% extension. Like, I wasn't convinced that we weren't finished yet. And here we are. We're actually almost at the 161% extension, which comes in at 96.13, I think it is, you know, roughly 96.15. I think that can get hit. Now, I'm a little worried that the Swiss franc is as strong as it is right now, and I am a little worried that the market is extremely short Swiss francs currently. However, I think it's possible that we bounce down here at 96.13. If you look at it technically, okay, we're hitting new lows, right? You can see how we're hitting new lows here, but also relative strength is divergently going higher. So because we're hitting new lows and relative strength is divergently going higher, I think the risk is that we do bounce. You know, is this going to be the low of the lows? Like, you know, if you bought it at 96.15, is it going, you know, to 102 after this? I don't believe that, not at this point. You know, we'd have to see. I don't know what we'd have to see, actually. I mean, we'd have to, we have a lot of work to in this particular pair to actually start to turn things around. But I do think that it's a potential bounce spot. So if you're bearish the dollar Swiss, I think you have to be very careful being short down here. Am I willing to get long? No, but it also, you know, if we start to bounce on the Swissy, it might clue us in that the euro dollar is done going higher, or maybe the cable is done going higher. So this is something that I am paying pretty close attention to today, not because I want to trade it, but I'm more looking at it from a, you know, will it help the dollar across the board, you know, get some sort of bounce if the Swissy starts to show some life down here. I think a lot of these moves. Yes.
Good morning, mate. I just wanted to say that we are currently also testing the 50% fib of the move that we got from the February low to the double top. So also another important level exactly here.
Got it. Thank you very much. So we, what Steve is talking about is the 50% retracement right here. So it's, you know, double confluence of some fib levels right around these levels. So could that offer some additional support? Yeah, it's possible. And thanks, Steve, for pointing that out. I forget what I was saying regarding the dollar Swiss. Anyway, I just think it's something that we should pay close attention to, that could, you know, ignite some sort of dollar buying. I believe that the dollar is going to be bought when there's risk aversion. I think that's the trade. It's not necessarily the trade with the dollar Swiss though, because I think when, you know, traders look for some sort of safety, they're going to be buying dollars. They might also be buying Swiss francs as well. The dollar Swiss is kind of like the, you know, the dollar yen. I'm not really sure how to trade it at the moment, but I can look at it technically and say, yeah, we may have some support. Excuse me. Sorry guys, I literally left yesterday. I left, my son was playing a tournament, soccer tournament yesterday, and I got up at 7 o'clock in the morning. It was 109 degrees here, so it's like desert hot, you know. And we left at 6:45 or 7 o'clock in the morning, and I got home at like 9 o'clock last night. That's and got up at 3 this morning. So I'm so tired. It's like I'm really worn out today, and I didn't even play soccer. Yeah, I'm interested to see how my son is faring this morning when he gets up. Anyway, so if I'm yawning, you have to excuse me. But you know, I'm looking for reasons why the dollar might find some support here and there, and this is one of them. Now, the Norwegian krona, we had this Gartley pattern on Friday. We bounced actually really well from the lows that we marked up on, Friday. We bounced, but here we are back trading at trend lows. So the U.S. dollar, Norwegian krona, I don't know if that's going to find a lot of support. The Swedish krona, we had the Riksbank had their monetary policy meeting minutes today, which were pretty hawkish, and the U.S. dollar, Swedish krona came under a lot of pressure this morning. You can see how it broke down as well. Now we are, near, well, we're near trend lows here, which if you just delete this and you go from probably at least these lows here. So the 618 retracement comes in right at 893. That should offer some sort of support here on the U.S. dollar, Swedish krona. But really, anybody who got long on Friday, which I didn't, but if you got long on Friday, you're looking at your positions right now going, what the, I just gave back all of my gains for no reason. But it was actually the meeting minutes from the Riksbank today that drove the U.S. dollar, Swedish krona lower. And I think all the longs are, they probably got their stops below Friday's lows. I would assume this is where all those stops are at. So anyway, so there's the U.S. dollar, Swedish krona. I am going to turn it over to my colleagues, Steve and Stelios. I'll let them go through the yen pairs. Maybe they have some better, maybe you guys have some better views on the yen. Yes, before I go, I wanted to mention a couple of things. First of all, if you guys haven't visited Forest Park FX, our sponsor of this webinar, and you enjoy these webinars, do us a favor. Make sure you talk with them about the reimbursement program, or simply a rebate program with getting a broker that'll give you some rebates, especially if you're here in the U.S. But their information is right at the very bottom of this page, which is at the reimbursement program page, which I'll just put a link in the chat box. So make sure you visit them. I don't know why anybody would be trading and not in our reimbursement program to get ForexAnalytix, be part of our community, or be getting cashback rebates as well. And then also we want to mention that starting tomorrow is our, I want to almost call it our annual offer. We do our new season of trading offer with ForexAnalytix. If you guys, the new pricing actually starts tomorrow, and you'll get 1 month. If you buy 1 month, you'll get 1 month free. But the better deals is if you buy 6 months. Well, it's actually, if you get a semi-annual subscription, it only costs you 4 months. So you get 6 months for the price of 4. Or the best deal, which is a great deal, we only do this a couple weeks a year, is if you buy an annual subscription, which is 12 months, it only costs you 8 months. So you buy 8 for the cost of 12, or you get 12 for the price of 8. That's what happens. And it's really the best deal that we offer all year long, and we do that just a couple weeks of the year. So take advantage of this offer. If you guys are not ForexAnalytix subscribers, you're not part of our community, you're not in our chat rooms where I'm at all day long after I leave here, and where the rest of us are at. You can see there's 80 of us in here right now. Make sure you join in, and the best prices come starting tomorrow, right, Steve? Stelios?
Absolutely. Tomorrow morning, European hours, the offer goes live. Exactly.
All right. Very good. So remember, you buy 1 month, you get 1 month free. You buy 4 months, you get 2 months free. You buy 8 months, you get 4 months free, which is basically a semi-annual and annual subscription. So, so great. And if I jumbled any of that up, Steve and Stelios will clarify, because I'm tired. So there you go. All right, guys.
Okay, all right. Have a wonderful day.
You guys have a great one. I'll catch you guys tomorrow, and good luck today trading. And thanks everybody for listening in. We really appreciate it.
Thank you.
Thanks, Rick.
Thanks, guys.
Stelio,
Hey,
you
how
want
you
to
doing?
tell us? I'm good, mate. You want to talk to us about the risk bank first before we go through analysis?
Yeah, I mean, we had the minutes today. It was on the hawkish side, and you know, it's not only the Riksbank, it's also Norges Bank this week. Broadly expected to hike rates. I think, if I recall correctly, about 80% priced in. They are currently at 0.5% base rate, which is way too low compared to how the economy is doing.
Speaking of which, USD NOK is currently about to test 61.8, breaking below 820.
Yes.
So there is a decent likelihood that this rejection was another rejection from the same descending channel, and it might even evolve in being something stronger. So putting it on a broad basis here, it is on the weekly chart, so we can see that this was like a major rejection on the weekly from this channel. Yeah, obviously them hiking rates is definitely going to help the NOK, and can get USD NOK even lower, perhaps even towards 8 once again.
Yeah, I mean the main thing is not hiking rates on Thursday, which I think the market kind of broadly expects. It's what the rhetoric is going to be, what the comments are going to be, and frankly, with inflation at 3.4% year on year, compared to Sweden, which is, if I recall correctly, it's around 2. So Sweden is at target, Norway is way above target. So yep. I actually like both Nordic currencies with a clear preference for the Norwegian kroner. So that's the main event for me for the week. I was looking at the economic data for this week, and there's a few items, but really I think that could be a mover for that particular currency, obviously. Now the other thing, I was looking at over the weekend, after the webinar on Friday, what's been happening, and it's been a bit frustrating because we're in the situation of will they, won't they, in terms of NAFTA and Brexit and China and the US, and will China pull out of the talks? Will Trump add more tariffs? It's a bit of a question mark at the moment. There haven't been any progress made anywhere over the weekend, so I don't have much to add from the end of last week in terms of all that. But yeah, this week, anything can happen in these things. We've been, especially for NAFTA and Canada and Mexico, it's been almost on a daily basis. Today we're expecting.
Yeah, and something. It's in my mind, it has become a little bit of a mini version of Brexit. You know what I mean? Everybody's bracing like for market moving news, and you get a lot of false starts, and the market is is kind of undecided what they want to do or taking direction. That's why we're seeing this kind of a consolidation. So the only thing I have to say is that whenever the market is expecting like big news, and it's coiling due to that, whenever we finally get a resolution with the whole NAFTA deal, I think that there's going to be a lot of dynamic energy built up in the system. So I pretty much believe that we're going to get to whatever kind of move we get, we're going to get some nice follow through. So until then, I would be quite cautious. Now, from the technical perspective, I think that one of the biggest moves, because these are quite choppy markets, to be honest. I believe that we're going to see some better markets within maximum October. I really believe it. But for the time being, you have to be a little bit selective because the dollar is choppy. So the vast majority of the other currencies are more or less choppy as well. But one of the developments that we had on Friday, and we seem to be having follow through today, is this breakout after a long period of time from Nikkei to the upside. So we finally cleared the 23,000 area. I expected that a break higher is a little bit more probable than the opposite. We finally did it, and I do believe that no matter how you see this as a technical formation, a triangle breaking out. Some people might even see here an inverted head and shoulders formation if you are of the type of people that believe that head and shoulders formation can also be continuation formations, because that's not like the mainstream view about that. Regardless, I do think that you need to respect this breakout from 23,000. I do believe that there is now a decent chance that we're going to be pushing towards the previous highs that we had early in the year in January. And I do believe that this is another indication that perhaps the USD yen, after breaking above this descending channel, can end up producing some follow through as well. Although, as I've said plenty of times, I find the USD yen to be an abomination for several months now. So, one way or another, I wouldn't be trading it. But definitely, this is an extra element in the analysis that you have to factor in when you're looking for a direction in the USD yen. So I do believe that there's not much resistance left for this move to extend towards the previous high at 113.17. That's one thing I wanted to say about the Nikkei and the USD yen. Now, another thing we can have a look at here is the fact that at the same time, the DAX, despite rebounding from a very important level, doesn't look that healthy yet. I mean, this rebound for the time being, dwarfs having to do with momentum, etc. The last move that we had lower. So far, a very nice rebound from a key level, the 11,800 area. But we're currently testing resistance. We seem to be stalling here. The move lower was quite stronger. So DAX still seems to be in trouble. And if we actually do break below 11,800, that's going to be a major breakout from like a long-term head and shoulders formation. At the same time, the FTSE also shows signs of weakness, right? Why? Because we had a strong move to the downside, and we found support, and we've now spent roughly 6 trading days, 7 trading days, consolidating, barely rebounding. These are usually the signs you see in a bear market. So to be very honest, I would expect that sooner or later this is going to fail, producing at least one more leg to the downside. So I would be very, very careful trying to be long here. I mean, I really believe that the FTSE, after this impulsive move, was looking quite bullish, and I was looking for signs, perhaps like if it found support here at 7,500, if this ended up being a triangle or whatever, and I saw some kind of a big reversal. I was even looking into buying it, but then we had it breaking down, and adding to that, as I said, this consolidation seems to be bearish as well. So if you're asking me in the short term, I think that there is more downside left, and the whole structure has become a lot more complex, because if I zoom out, you can see that this is some kind of an irregular correction. We'll see how this ends up being. One thing is for sure, I wouldn't be buying it right here, right now. If I had to do something, I would be selling it in the short term. Now, US stocks are still overperforming more or less the vast majority of the rest. So we see that the S&P is more or less, I mean, Friday and so far today is consolidating like very, very close to the all-time highs. The Nasdaq, to be honest, has started showing some signs of weakness. To me, even this recovery, given the fact that we had 3 decently strong bearish days, seems like it might fail, and I'm still monitoring this ascending wedge. I mean, we seem to be breaking below it, but the 50 daily moving average held price action, which is just below. We climbed above it once again. I'm less convinced about the Nasdaq. If I had to be short one of the US indexes at the moment, it will be Nasdaq. To be fairly honest, I do have a small position since today in the morning. Given the fact that we have a lot of rumors about China not wanting to perhaps negotiate with the US, we are expecting perhaps more sanctions from the side of the US. So I do think that the reward to risk ratio having to do with the Nasdaq is for lower prices from here. But I'm still quite skeptical about it, so I don't want to commit with a larger position. Now let's have a look at the IWM. As you see, the IWM is also looking fine. I mean, this looks like it's like the S&P more or less, a consolidation near the highs. But I have to remind you here that, in my opinion, there is like very serious confluence of resistances up here towards 175. So even if we saw one more push to the upside, I would be extremely careful there, because those are long-term resistances, both of them coming from long-term ascending channels that have defined the very frothy parts of this uptrend. So I would be extremely careful. I would probably be looking at another leg higher as a selling opportunity, but but that's my point of view. So I think this covers more or less what I'm looking for the indices. Now we can have another look at the metals. They haven't done much since Friday when we had the webinar. We definitely saw some weakness having to do with gold, but that hasn't really broken the trend. We seem to be consolidating. I'm viewing this consolidation in the short term for the time being as a bullish one. I do believe that there is one more leg missing to the upside, so I still maintain 2/3 of a normal position long. And having to do with silver, we're seeing some reaction today as well. But we yet have to break out of this descending channel. So for me, it's all about this descending channel and 14.30. I do think that only once it clears $14.30, we can be looking for a bigger recovery here. Same deal with copper. Copper is consolidating. So far, this looks to be a triangle. I would expect that this will fail and should resume to the downside for at least one more leg. Only if it clears 273, 274 to the upside, I would be looking at it, with a different pair of eyes. And platinum remains extremely weak. This looks to me like another bearish pennant. As you see, several trend lines of resistance anywhere between 810 and 825. So as long as we remain, below this, I would be very, very careful. And having to do with palladium, I had drawn that a long time ago. That I expected the uptrend to resume to 1,000 and then perhaps to see a failure. But we got the first part. We went to 1,000, but we haven't seen this failure. And I have to say that this coiling price action is telling me that there is a decent chance that we're going to get one more leg to the upside. So my main thesis, since we didn't get like a big rejection from there, is that probably palladium will extend higher in the next shorter move. It looks more probable than not, to be honest. So I think that covers more or less the metals. Stelio, by the way, do we have any questions?
Well, we have a few questions on things that Blake has already talked about. There are people asking about euro dollar and cable, and USD ZAR as well. So
USD ZAR, yes, sure. Let's have a look at the exotics. I'll show you the other pairs as well, though, for two reasons. Because I'll show you. First of all, let's start with USD ZAR. USD ZAR, as you see, found support at the previous high here. We said the other day that this might happen. There's another zone of interest down at 1440. Regardless, we were expecting a move up there when we were down there. This has already happened. So, we don't need to really keep this anymore. But I have to tell you that this is what might happen from here. So, we might see, even if we get like a little bound like we're getting, I think that we might see at least one more leg lower towards like 1440. So, I would be a little bit more careful. I think that USD ZAR still has a good potential of resuming higher, but in the short term, I would give it more space to move lower. USD TRY, on the other hand, is moving perfectly according. I had two things in mind here. One of them my main thesis was the triangle, and yeah, it has proved that, you know, it is within a triangle. That's bad news for the Turkish lira because, you know, I would expect that this will break out and resume to the upside, but until or before this happens, we might see a larger period of a consolidation. Still, the possibility of one more leg lower before higher is not out of the question. But, you know, one way or another, no matter what kind of a corrective move we end up having here, I don't think that the Turkish lira in the medium to long term is out of the woods. And that's pretty disturbing, you know, for the Turkish side, because the economy is already under intense pressure. The same, as you'll see, more or less applies to the vast majority of the exotic currencies. For example, let's have a look at the USD ruble. We had like one last push from the triangle. We're correcting lower. This correction might extend more, but you know, I wouldn't rule out another push higher afterwards. So all of the exotics seems to be correcting. I mean, the dollar seems to be weakening against the exotic currencies, but in the vast majority of the cases, I'm more or less convinced that those are corrective moves and there is more upside following what we're seeing. Now, speaking of the cable, I was expecting that a break above 130 should eventually lead to 133, and I haven't really changed my mind about that. But I also need to notice here and take notice of the fact that the cable seems to have found a resistance in the parallel of this trend line. If you connect this low with that low and you draw the parallel, as you see, we found resistance there on Friday. We're now testing it once again. So, you know, I'm a little bit cautious due to that. Okay, I also have a small position here, and I feel okay with that. I still believe that we can make it 133, but as I said, I'm watching this as a resistance. If I see like another rejection from here and like some big candle, I'm probably going to bail out from this, because I have no evidence to suggest that this is anything else than a corrective move higher. Now, the gapping looks somewhat more constructive, I mean, having to do with the strength of the ascent, but as we were saying some time ago, you know, it has come now to the prices that I would be quite careful with this as well. Why? Because, you know, we're now retesting some major previous support resistance area as resistance. The 78.6 of the last leg lower is here as well. I do see, you know, so far like what looks like an ABC. So this can end up being another corrective move as well. I would be very careful up here, because I wouldn't be surprised if I saw a correction. If I saw a rejection and, you know, a resumption lower. Obviously, if that happens, that's also bad news for you know, pound USD as well. So, you know, this is another thing that makes me a little bit more careful, that I see gap being on, you know, testing resistance once again. Now, having to do with the Euro USD, you know, it's finding it very tough to clear this descending trend line to the upside. So, you know, I'm waiting. I would expect that sooner or later it's going to do that, because I do expect that we might have another leg higher towards at least like 118.50, perhaps even 119.30. 119.30 is the 50% fib of the last of this move lower. As you see, the 200 daily moving average is also converging to that level. So until we get there, this can easily end up being a double confluence of resistances. So, you know, I would favor another push higher, but, you know, I need to see this breakout first, right? That's also the reason why I kept saying last week that don't trust the recovery in the USD Swiss, despite giving us 2 strong days to the upside. I said that my main thesis is seeing another rejection from the 97.50 level, which we did get, and another push to new lows, which we did get. As Blade showed, we're currently at the 161.8% extension of this, let me mark it, of this move higher. It's also the 50% fib. So yeah, sure, can this end up providing support? Sure it can, but, you know, seeing where the Euro USD is at the moment, to be honest, I wouldn't be surprised if we saw a bigger extension to the downside, perhaps towards the 61.8, or even a little bit lower towards the 94.50 area, which has acted multiple times as support resistance. So I would definitely still be holding and not buying USD Swiss here. Okay. If I see some type, of a big reversal, given the fact that, it has satisfied my minimum expectations, I would consider it. But, my feelings tells me that it's not done yet, especially, if I combine it with, my view on the Euro USD. And if we also combine it, let's have a look at the Euro Swiss with my view in the Euro Swiss, which, was saying that there was another leg to the downside. Somebody will say, but, we've already done that. Yes, and yes, we have already done that. But to be honest, the target I was looking for was this 110.70, the equality target. And unless we form here like an inverted head and shoulders formation, if we turn higher from here, this is a possibility. I still, despite this big candle to the upside, which looks to me more like work from the S&P than anything else, I would really find it quite likely to see more weakness in the Euro Swiss, which means more strength in the Swissy, which means that might help USD Swiss lower, along with whatever the US dollar is doing. Now, combining with all that, since we saw the Swiss part of the equation, let's just strip out the dollar and see the index, which is more or less a basket. Of course, it's it favors euro by quite a lot, but even if you look at it like this, it looks quite heavy to me. We got another rejection from the 95 area. So in all honesty, the dollar index doesn't seem, in my eyes, to be done. I think that, it needs to push lower from here. Somebody can even see here, and, it's not that much of a stretch. Head and shoulders formation, right? There it is. So, I would be quite careful, because I believe that it's quite easy to get a breakout and then make it to this zone, which in my opinion is quite important. It has acted, this 92.70 area has acted several times as support resistance in the past. The 200 DMA is also entering that zone as we speak, and every day is going to be moving a little bit higher, since price is above it. So I would be I would expect this to act as a magnet, right? So my thesis is probably more dollar weakness, and I heard Paulie is of the same opinion. I respect Paulie very much as a trader. I think that his gut feeling, I know that his gut feeling is right, much more than wrong. So, I like that, he is looking for the same thing. He said, I would be looking to sell the dollar. More or less, I'm of the same opinion. I do think that the dollar probably will produce more weakness before anything else. So, this is my general view of the market. Stelio, do we have any fresh questions?
Yes, we have two, which I think is probably enough to take us to the end of the hour.
Yep.
Our friend Nick is asking about DAX and the bunds. And bunds actually are interesting because, but the bunds are interesting because they seem to be trading quite heavy.
Absolutely. Okay, first of all, let's have a look at the continuous in bunds. And first of all, we're going to do it on the weekly. By the way, if he lost what I was saying about the DAX, so if the question came in later, let me say here briefly two things. 11,800 having to do with the DAX remains like key support. I think that if we break below that, it's going to be downhill from there because it's a huge head and shoulders formation. I bet that the whole market is watching that, and people are going to start bailing out once we clear that. So unless we see, in this kind of breakouts, there are two possibilities. One, you see a breakdown, for example, and then you get an immediate snapback, which fakes everybody off. But if you actually do get the breakdown, and you don't get like an immediate reaction, then you would expect that people are going to really be scared, and we're going to get a big follow through. So DAX is currently testing 12,100, which is like soft resistance. The recovery doesn't look that impressive to me, so I think it's still in danger. And I told you which one was the key level. Now, how we do with the bunds? First of all, let's have a look at the weekly. As you see, another major rejection on the weekly from this large formation. I have to admit that this formation, any way you slice it, looks like a bullish one, right? So look at this huge uptrend that we had, which, not coincidentally began when the financial crisis began. Why? Because the bunds are the benchmark for safety, in my humble opinion. Not in my humble opinion. I mean, I think for people that have eyes and know the differences between the German economy and the US economy having to do with fiscal, monetary policy and prudence, I would deem that the bunds are a lot safer than the treasuries. Also in comparison to the approach to monetary policy from the two central banks. So no matter what happens, as a fact that the ECB, or even if, let's say, the Eurozone breaks down, the Bundesbank will always be more hawkish than the Fed. And somebody can say, but how are you saying that? I mean, the Fed has been hiking rates, and the ECB has even guided forward like another year to no hikes in sight. Yes, but you have to take into account here that the ECB was extremely late in responding to the crisis, A, and B, and most importantly, oppositely from what the Fed has been doing. For example, the Fed has been constantly shifting the goalposts having to do with what are the targets. I remind you that they began by looking, before they started hiking, for, let's say, employment like 5 to 6%, and inflation, close to 2% but below it. And now we've shifted the goalposts. Unemployment is below 4%, and it was like below 5, deeply below 5 before they started hiking, in essence. And at the same time, once they pushed through the 2% inflation target, they started shifting the goalposts there as well, saying that we're looking for symmetrical inflation, meaning since we spent some time being below 2% inflation, we now can spend some time being above 2% inflation. On the other hand, many people didn't notice because we were on the webinar, so I didn't hear Draghi speak, but I did read all that he said afterwards. Draghi was specifically asked on Thursday. He was asked, "Do you think that you can actually that you would tolerate inflation for a period above 2%?" And he said no, right? Which shows that with obviously the Germans having a huge saying in that, the ECB has set some targets, and I think they're going to stick to them. Oppositely from the Fed, given the fact the huge spiral in the deficits in the US, I doubt that the Fed can do much on the hawkish side. I doubt that they want to do much on the hawkish side. That's why they're looking the other way. And in my opinion, they will keep looking the other way, even if inflation ends up picking up a lot more than we're currently seeing. So speaking of which, let's go back to the bunds. I believe that this is like a large corrective formation. Whenever we get to the next financial crisis or a recession, I think that it's very likely that we're going to see a breakout from here. But so far, we got rejected. So I have to say that in the short term, if we go back to the daily, you're going to see that, where is it? There it is. If we go back to the daily, you're going to see that even if you want to look at this like a triangle, I mean, the larger formation is those are two red trend lines. But even if you want to monitor as support this blue trend line, there is potential for more downside. We're currently about to test the previous low here at 160.90. I said when we got rejected from there that I believe that we can actually clear quite a few levels and make it 160.90. We're there, but I do believe that we can keep pushing even lower, towards this 160 area that we find this ascending trend line support, but why not even lower than that? So that's what I think about the bonds. Having said that as well, I think it's a nice way to wrap it up. Thank you very much, Blake and Stelio. As Blake mentioned before, starting tomorrow morning, we have this special offer. It's going to be up only for less than 2 weeks, actually. 1 + 1 month, you pay 1, you get 1 free. Semi-annual plan at the price of 4 months. Annual plan at the price of 8 months. This is your opportunity to subscribe to ForexAnalytix at a much better price. Thank you all very much, and we'll be here tomorrow once again. Bye-bye.